QuickBooks Online 2025 Sales Tax Setup. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 project file we set up in a prior presentation, continuing to lay down that foundation, the underlying basic infrastructure that we can compare to a city on which we would then build our building blocks here, being the double entry accounting system itself, entering transactions with the help and use of forms located in the plus or new button, broken out by cycle. But before we do that, we have to lay down the foundation, which is typically found under the cog, the main foundational items being the lists, including the chart of accounts and the products and services. We are entering those as we enter our beginning balances that we're imagining we're pulling in from a prior accounting system. And as we do that, we also have to pull in tax implications into our accounting system. In this case, we're looking at the sales tax, which is a type of consumption tax. Remembering, the double entry accounting system itself is universal, so it's going to be the same no matter where you are at, although you're going to be using different currencies in different locations. The thing that differs is laws and regulations. The laws impacting bookkeeping, most of course relating to tax laws and regulations. So that's where we really have to drill down on where we are particularly and the type of industry we are in to see the types of laws that are then going to tweak it, which is good in one sense because it's an area that we can specialize in, but it's also of course going to complicate the accounting system. So laws, regulations, including taxes, always complicate the situation. We are in the United States. In the United States, we have a federal income tax system, so we have to deal with income taxes, which is often one of the main reasons that we need to create the financial statements in order to get the income statement to report our income taxes, even if we're a small business, even if we're a sole proprietorship. But the states can also tax differently on the state needs. We have a difference between the Fed and the states often choose, say, a consumption type tax, which we call a sales tax. Many other countries might use, a consumption tax for their federal taxes instead of a sales tax. So note that as you're learning taxes, it's useful to say what type of tax is being applied here. Is it an income tax? Is it some kind of payroll tax? Is it a consumption tax? And then try to get an idea of the general types of taxes that are out there, because there's not really any new taxes under the sun. The governments throughout history have found a bunch of ways to tax people. It's usually a combination of types of taxes that we have seen elsewhere that are being applied in any particular location. So if we can understand somebody else's taxes, we can usually apply it to some form of taxes that we might be exposed to in some way, shape, or form. Or even if not, it's useful to just understand the accounting and complications related to the taxes. It's just good practice. So we have then been entering these beginning balances, imagining this is from our prior accounting system, and we printed this, we're imagining as of December of 2024, and we're going to enter them into our system and start our accounting system as of January 2025. Now, as we have done that, we started with the most difficult one being inventory, remembering that you would only have inventory if you sell inventory, and you would only be tracking the inventory in the system if you're tracking it on a perpetual inventory system. Inventory in the United States is also the one that's more likely to be subject to sales tax, because sometimes the service items might not be subject to sales tax for whatever reason, but the inventory items might be subject to sales tax. So that sales tax also is going to be tied to the items that we set up. So in other words, how logistically are we going to deal with sales tax? When we set up the items that we sell, then we would like to be able to tie the sales tax to those sales forms, calculating the sales tax as we generate those sales forms. Now let's give a quick recap of what a sales tax is, and then we'll go about kind of setting it up. So if I go into the plus button here, our sales forms are an invoice and a sales receipt form. So if I go into, say, a sales receipt, then we could sell some item here. So if I sell, a guitar in our case, then it's going to cost $500. That's what we charge for the guitar. Now, the sales tax is the imagining of the government is the sales tax is not an expense to us, but instead is going to be a tax on the person buying. It's a type of consumption tax, right? So the person buying is the one, in theory, paying the taxes. But you can imagine logistically that it could act like they're kind of taxing us, the business, right? Because you could say, well, we have to incur the sales tax, meaning we have to pay the sales tax to the government for each of our sales. So it's kind of like an expense. But the government wants to pretend that's not how we're going to account for it, right? We're going to account for it as though we're not charging the business, but rather we're using the business or forcing the business, let's be real here, forcing the business to be our collection arm. And therefore what's going to happen is we're going to say it's 500 sales tax. We're going to add whatever the sales tax rate is. So we have to collect something greater than 500. Let's say that it was, $50, $550, right? In this case. So if you had to collect $550, the total that they would have to pay us is $550. What would that look like from a journal entry standpoint? Well, we would have to get cash of $550 would go up. The other side of that would go to sales, but we're not going to record $550 to revenue. That's what we would do if we counted the sales tax as an expense, because we would record $550 as revenue and then $50 as the expense, the net income being $500. But no, the government wants it off income statement. Therefore, we would put the $50 on a liability account, sales tax payable, right? And so that's going to be the $50 over there on the sales tax payable, and sales would only be the $500. And then we'd have to inventory if we have to deal with the inventory as well. So that's going to be the idea. So that's how we want to set this up. Now, note that in order to do this, you'd have to use the sales forms in order to make the sales. Leave without saving, yes. And in some cases, you might not be doing that. You might be saying, I'm selling stuff possibly, and I'm using a perpetual inventory system. If that was the case, then you might not be using an invoice or sales form, and it's not going to calculate automatically for you because you're going to basically be using a deposit form to record the revenue. In that case, you would have to manually include in the sales price the sales tax so that you make sure that you collect the sales tax, and then you'll have to back into the calculation of how much sales tax you owe to the government. So it's just like when you're being shaken down by the mobster, right? That's how it basically works. So they want the protection money. So theoretically, they're going to stop the people coming in and robbing you all the time. Not in California, but in theory, that would be the idea, right? So we're going to rob you so that the other guys don't rob you, right? And so you're like, okay, this will pay you to stop the other guys from robbing us. And then you give them money. Well, how much money do they want? They want, 5% of the sales or whatever, right? So now we're going to have to basically, calculate our sales and then pick up the 5% or whatever that we're going to have to give to basically the government. How's that going to work logistically? That means that the sales for the current month, for example, we might have to pay the sales tax on them in the following month, or it might be on a quarterly basis. We might be saying we're going to collect sales tax for 3 months and then pay the sales tax that was collected in the following month after the first quarter or after each of the quarters. Or it might happen on a yearly basis. Those are changes to the law that will be dependent upon the location that you're in and most likely how much you collect in sales tax. Now, one other thing that I just want to point out that's really going to complicate things is if you sell sales tax to multiple locations in the United States, for example, multiple different states, which often happens in an online situation. So if you're selling stuff online, it gets kind of messy because now you're thinking, well, where am I subject to sales tax in all these different states, right? So you want to be careful with those online sales and make sure you're structuring it properly We have another course or section on like Shopify stores and Amazon. If you're with Amazon, maybe Amazon handles that to some degree, which would be nice. If you're in a Shopify store, most likely not, right? And you're gonna have to figure and make sure that you're handling the sales tax laws properly. If you just have a store in one location, then it should be fairly easy. That's going to be the scenario that we will run here, because the sales tax will be dependent upon the location that you're in. And QuickBooks is pretty good these days at basically being able to kind of automate and calculate the sales tax without needing a level up in paying QuickBooks more to do that, as you do need to do with payroll, which is out of control complicated in the United States and become a specialty in and of itself that you do have to pay more for. All right, so let's think about what we have to set up for the sales tax. We set up last time the sales item. So there's 3 things that we need to do. 1, we have to set up the sales tax so that QuickBooks knows what sales tax to apply when we sell things. And then 2, we need to go into the items that are subject to sales tax. We're going to imagine here that it's going to be the inventory items and not the service items, and turn on the sales tax settings. And that's basically it. But it's possible that you have some customers that are not subject to sales tax because possibly you're selling to a not-for-profit or something, or to a government agency, although hopefully, you would think they would still be subject to sales tax. It's probably some corruption in that case, which case Doge is going to go in there and fix the thing. But anyway, no, then you could go into the customer, and if they're not subject to sales tax, you could say, if I sell to this customer, even though I'm selling them something that's subject to sales tax, they themselves won't be subject to sales tax. So set up the sales tax, pick the items that are subject to sales tax, and then pick the particular customers that might not be subject to sales tax, which oftentimes is none of them unless you're in a particular situation. Okay, so let's go to the taxes tab on the left-hand side. And so we're in the sales tax up top. It says, I'm going to close the hamburger. Save time with automated sales tax. We do the work for you so you can focus on your business. So we take care of the mobster, and we just take the money out and pay them and keep them happy so they don't come after you. So by my mobster, I mean the government in this case. So create your sales transaction. We calculate the sales tax for you. We base it on the info in your invoice and state local tax rules. Our sales tax experts keep up to date with laws across the U.S. That's actually really nice, because that can help us a lot as we try to figure out what we're doing here. Feel confident that you're not over or undercharging. That's good. I don't want to pay the mobster more than the mobster will take without hitting me over the head. Never miss a deadline. We remind you to file. That's good too, because then if you don't, the mobster comes after you. They don't hit you over the head. They just charge you interest, and then they keep charging you interest and penalties until you. Address. Here's the address we have for you. So we use your physical business address to calculate your sales tax rates and to determine your main tax agency, which of course works great if you have a physical location. Again, if you have an online type of sales structure, it might be a little bit more complicated, so beware of that. We're going to imagine for our purposes that we're making sales in Beverly Hills. So this is a home in Beverly Hills. It's only going for about 22 or 25 million or so. So, I mean, if you want to purchase that, I feel like I should get a piece of the commission for making you aware of it. In any case, let's go to the next one here. We're going to say this is the tax agencies. So you have to pay sales tax to these tax agencies. Based on your business address, you have to pay sales tax to these tax agencies. So it's going to help us and actually tell us which tax agencies we are subject to sales tax for based on the location. This is great and something that QuickBooks didn't used to be able to do as easily, because you can imagine that it is easier to deal with federal laws because they're universal across the United States when we're thinking about the United States, whereas the state laws are not. So it becomes a lot more difficult to come up with software that picks up all the state and local laws, but the software is becoming much better at doing that. And that is great as well, just from a side note to my view, because it might give some more control over the states to be able to do their own kind of regulations on how they want to tax, as the United States was basically designed, without having these excessive burdens that are imposed on anyone that starts to do a business, because hopefully the software can kind of handle that. Whereas you could see why there's a natural tendency to try to put all of the laws and therefore the power in one particular location, like on the federal side, which is easier to do the software for, but it consolidates too much power in one location. I think that's one of the problems we have in other areas, like in Europe, for example, that doesn't have the same kind of federal structure and then the state structure. So the Fed takes care of defense and the state does everything else. So you have these different laws across the entire continent, which makes business across lines difficult. But hopefully the software will be able to manage that and still allow different locations to have their different, taxation laws, although having different currencies in different locations complicates it too. But anyway, so tell us how often you file so we can track your deadlines and how much you owe. Your filing frequency is on your sales tax frequency registration. So now when we have the location, now we have to basically be signed up for the sales tax. In our case, it would be with the California Department of Tax and Fee Administration, which would then tell us the frequency that we have to pay them. Usually this will be dependent upon how much sales we make. In other words, if we don't make that many sales, we might only have to pay them annually. Why? Because they're not as concerned, right? So they're going to say, we're not going to put an excessive burden on you to basically pay us on a monthly basis because you don't make that many sales, so just pay us on an annual basis. But if you make a lot of money, then they want their money sooner, and we're going to imagine on a monthly basis for our purposes, because we're only going to do a couple months of data input, and therefore a monthly basis will give us some practice on calculating the sales tax and then paying it. So we're going to do somewhat of a generic problem in our case. So you have registered for sales tax in any other state. So we're going to say no, we're going to make it easy. So we only have sales tax in one state. So that'll make it easier for us, obviously, with more states that you're registered for sales tax for, because you have locations or possibly do business online in multiple states. Then that's going to get messy fast. And so you want to do your research on that. So here are the tax agencies we'll set up for you. So we got the California Department of Tax and Fee Administration. We in California are really good at setting up very long bureaucratic names. The bureaucracy has taken over the state, and then having them be totally bloated and somewhat useless, as has been demonstrated with recent fires here, which have been comically yet tragically a joke, but sad at the same time. But my goodness, it's shocking. I'm shocked to see the level of incompetence anyway. So we have the automated sales taxes turned on. So from now on, sales tax will be automatically calculated on your transactions. Done. Sweet. All right, so now we have the taxes set up. Here it is. But what I'd like to do is try to put together kind of a generic sales tax, which is simply going to be basically 5%, just to make it generic so that you can get the concept of it, but not it being specific to the particular location of California. So I'm going to try to do that by saying, all right, if I go up top, we have the managed tax categories, and then we've got the sales tax settings. Let's go into the sales tax settings here. And you can see up top, we've got the tax agency, the California Department of Tax and Fee Administration. That's who we're going to have to pay the taxes to. That's the mobsters that collect our money and then don't stop anyone from robbing us. And then they don't spend our money well, and then fires come in, and your fire hydrants spit out gurgling sludge, and it's ridiculous. But then what happens? Let's say we add a custom rate up here. So I want to try to add a custom rate. And so I'm going to say, let's say this is going to be a combined. And so the reason I'm going to be thinking about it as combined is because possibly when you're dealing with sales tax, you might have state tax and then local taxes that basically combine together, so that you're basically paying multiple sales taxes, but you want to be collecting them at the same time. So let's say that we have the So it's going to look something like this. I'm going to say that the rate, let's say that we pay the state, and this is just a generic sales tax. We're going to say I'm going to still pay the California Department of Tax and Administration. Let's say that we pay them 4% as just a generic sales tax. It's already calculated the actual amount. This is just a generic tax. The local, then, we're going to say is 1%. So we have to pay to the local, then another 1%. I just used the same vendor that we're going to be paying here, but I just want to show the idea that you might be breaking out the total sales tax you're paying for multiple different locations. And then you can add other locations here so that even though I'm paying sales tax to different buckets, in essence, that it's going to be charged at the same time when we do our sales tax forms, the invoice and sales receipt. So let's go ahead and save that. So now you can see this is our custom tax that's been calculated down below. Okay, so now we also have this item here which says manage sales tax category. I believe this is fairly new. It's in beta mode, but it's basically pulling in the items, breaking them out by products and services, which might make it a little bit faster for us to determine which of the items are subject to sales tax. So I'm going to say all of the products are subject to sales tax. So I'll check them all off, and then I'll select a category. So here's our categories. Now, there's usually a generic category that just says I'm going to be subject to sales tax. I'm going to try to say I'm in retail here, and then I'm going to say it's going to be taxable retail items not applying the federal, local, or the Florida local surtax, because we're not in Florida. So I'm going to say, let's do that, and then say we save that one and see if that applies it out to all of them. I'm not going to apply out the sales tax to the service items. Now, to double check that, let's close this out, and then I'm going to go into my ham boogie up top, and let's go to where the items usually are at under the sales tab, and then we're under products and services, closing the hamburger. So here are all of our items. So again, all of the inventory items we would think would be subject to sales tax. So let's go into not the diagnostic. Let's go into this one, Diamond Head ukulele, and just check out the detail. Oh, this is, let's go back, baby. I wanted to edit it. Closing up the hamburger, and let's go into the edit of it. So this is the information that we would see when we do the data input for it. And then if we scroll down, here it is. We have the sales tax item under the sales category. So what sales tax category? So it's being applied to retail items, okay? And then if I hit the drop down, we could just put it into the generic taxable versus non-taxable. But I think this category will work. So the ones that should not be in that category are the service items. So if I go into like the diagnostic, for example, we're going to imagine, oh man, I did it again. Let's go back and close the ham boogie, edit the diagnostic. And if I go into sales, it's non-taxable. So I think that is correct. So let's test it out now. I'm going to close this out. I'm losing my voice. Let's add, don't go voice. I need you. This is important. I'm going to hit the plus button. People need to know this stuff, man. I'm doing the Lord's work here, teaching people about sales taxes. I have to keep going. So this is, let's go with the sales tax, sales receipt form. And then otherwise, now I set up a new customer. If you don't have that, I just setting up a generic customer one. So just type in customer one, just to have a generic customer to apply the tax to. And then we're going to scroll down and let's just choose the ukulele, the good old ukulele. And then you can see the tax is being calculated down below. So notice it's using by default the automated tax based on the location. I'm going to keep that as the default just to note that that's normally what we're going to do. But for the purposes of our generic problem, I'm going to switch it down to the California tax rate, and also note that you can add a custom rate just for the purposes of the practice problem if you so choose. We've already added it here. So let's say we just do a generic 5%. So now let's do a quick reminder of what's that going to do from a journal entry standpoint. So it's going to look like this. If I think about it, we're going to say, all right, we charge $32, but we have to pay. California is going to shake us down. So we're going to say, all right, $32, and let's imagine we only have to pay them 5% times 0.05. So that's going to be, we have to collect another $1.60 for California, or in total, that would be 32 times 1.05, 100% plus 5%, 105%, or 1.05, which means we're going to have to collect $33.60, right? So what's the journal entry going to look like? It's going to increase the cash that we get by the total amount plus the sales tax, $33.60, but the revenue is only going to be what we charged, $32. The difference of $160, the sales tax, is going to go into the liability account of sales tax payable, which will keep accumulating upwards in the liability direction until we pay it, which we are going to imagine will be next month. Next month, we will pay the sales tax that we collected on this month's of sales. Okay, that's the general idea. Now remember that you can imagine that what's really happening here is we're getting charged sales tax, like we're getting hit with a tax as the business. So you can imagine, like, why wouldn't I record it as $33.60 of revenue and then sales tax expense of $160, which would have the same bottom line impact as the way we're doing it with off income statement sales tax payable. That's because the government wants to pretend like they're not hitting the business. You're just the collection person. They've made you into the tax collector. They want to pretend that it's on the consumption, which you can make an argument for either way, but just remember that question's going to come up if you're a bookkeeper, because your clients are going to say, hey, look, I paid all this money in sales tax. Where is it as an expense when I do my income tax calculation at the end of the year? And you have to be able to tell them you did pay it, but you didn't record it as an expense because you didn't record the revenue in the income statement. Both revenue and expense were off income statement recorded on the balance sheet. All right, let's close this out. And then I'm going to leave without saving. One other thing to remember is that if we go down into the sales area and into customers, the last piece, remember, was particular customers. By default, the customers will be subject to the sales tax based on the location, that your location if you're in a store, but maybe they're subject to a different sales tax based on their location, or they're not subject to sales tax at all because they're the government or something, and you know, they get away with murder until Doge goes in there and says, this has got to stop, man. This has got to stop. No mas with this crap. I don't care if it's peanuts compared to the national budget. It makes us look bad, okay? It's the goodwill is leaving. You need to rein it in. Okay. I don't know where that came. Okay, let's scroll down a little bit. We're looking for the tax area. So in the tax area down here, like if we said that this client is tax exempt, we can check that off, give the reason. They're a federal government, the state government, local government. So the government, obviously, again, getting the perks and whatnot, you know, but whatever, dude, whatever. I'm sick and tired of it. Okay. It's okay. I'm going to hit the drop down. Now we could also say that they're going to be subject to the whatever sales tax that we applied. So maybe they're in a different location, and we can say, instead of having the automatic location rate, we give them the other rate. Okay, so that's going to be, so if we were to do that, although then they would have been subject to sales tax based on our location, which is driven by the item, they would be overridden by what we set up the client to be, which would be subject to no sales tax or possibly a different rate. All right, so that's going to be the general idea. We will see the sales tax playing out as we go through our practice problem. Do you want to leave without saving? I do want to leave without saving. If I wanted to save, I would have saved. I wouldn't. Anyways, let's stop it.